Cats, my name is Tom, I'm the crypto investor, and it's time for our weekly market roundup where I share with you, I impart the 20 or 30 hours of crypto knowledge into one high density nugget for your consumption. I do these in one take, so there are a few mess ups. If you do appreciate the content, if you do like what I put out there, please do hit the like button, please do subscribe. I don't get paid for this. I haven't got 4,000 hours of viewed content on YouTube yet, but let's get there. All right, enough pleading. Come on. Let's have a look at the heat map, and you can see that overall it's red. It's not aggressively red, but it's not a great week in crypto. Ethereum is down 3% on the week at 3,300. Bitcoin is slightly up 2.5%. So we're just seeing it outperform Ethereum a little bit. Cardano really is quite a buy the rumor, sell the news, down 13% after releasing its smart contracts. Solana, unsurprisingly, down after the Layer 1 blockchain went down itself for 20 hours and didn't function, and we'll look at that in a bit. And the rest of the Layer 1 somewhat down, apart from Cosmos. Atom is up 30% for the week and hitting new highs, as is Avalanche, still looking really strong, up 13.7%. Terra Luna down 15%, despite the fact that they are about to have their almost ultrasound money moment where it will become deflationary in 2 weeks' time with Columbus 5. So I think Luna is representing really good value there for me. We've seen DeFi just down now, but DeFi had a fairly good week. Synthetics up 10%. All right, let's go and have a look at the bubbles and see what's going on. Well, we can see that UC, I don't know what that is. That's just made its way into the top 100. If it stays there, we will pay attention to it. There's Cosmos up. Audible Audius token is doing very well. This is on the back of a successful round of funding. They also have, I think, Katy Perry and a few other artists on board. This is like a decentralized Spotify that's been created. You know, right now musicians get very little remuneration for their songs. They make most of their money through live gigs. And this looks to change that. It looks to remove all the middlemen and ensure that artists can effectively directly give access to their music through a decentralized protocol. So really quite cool, and all power to them. Let's see if it takes off. I haven't bought the token. Last time I looked at it, it did have I think it had a 7% inflation kind of built into it, which was not good tokenomics for me, so I didn't buy it, but definitely one to keep an eye on. All right, what have we got going on? Well, this week we have the Cardano Summit, so that's probably got some interesting new launches for different Layer 2 solutions being built on Cardano. We have Pancake Swap releasing their NFT marketplace. There's also a marketplace called Small Puddle, which has been released on Arbitrum. So OpenSea is just quickly losing its monopoly that it's been holding, but I'm sure they've made a lot of money in the short amount of time that they've had that monopoly of the NFT marketplace there. And what else? Nothing really of too much of note going on. Okay, quickly just looking at the burn, we can see that Ethereum there's now been 322,000 Ethereum burn. Basically, we've been seeing $1 billion worth of Ethereum removed from supply every 6 weeks. $1 billion every 6 weeks. That's the kind of metrics which we are looking at. NFT mania has eased a little bit, so we haven't seen quite as much. I mean, it's still the biggest creator of burn is OpenSea, but ETH transfers the second, and then Uniswap. Okay, what we got going on? So I think fairly big news is this. Layer 2, this is transactions on the Layer 2 of Ethereum. So basically, Arbitrum has created this massive jump in activity on Layer 2. And what this is, what Arbitrum do effectively, if you're not aware, they're bundling transactions. So you get loads of transactions at the same time that go through as one transaction, which reduces the amount of space needed, the block size needed on the network. And it means that it can help Ethereum to scale. It can reduce the gas prices. And you may have seen that gas prices have gone down this week. So it could be Arbitrum. It could be that NFT activity is just starting to ease after the mania, but we'll see. We'll get a clearer picture. That's the lovely thing about this. It's a very transparent space. So it could be that this is one of the things that's helping Ethereum to scale, as well as obviously 2.0 and sharding all coming in 6 months' time. But this is really good to see, and they've got 2.7 billion already locked in value in Arbitrum, and already 75% market share, and it's only been going like less than 2 weeks. So yeah, parabolic stuff. All right, what else have we got going on? Okay, so the big news of the week, of course, was that Solana went down for 20 hours. It was actually a Solana app that was designed to propagate the benefits of Solana and then evangelize how good it is, messed up a little bit and started putting 400,000 transactions a second through the Solana network. It flooded it. The thing started forking, all started unraveling and falling over, and they had to press the stop button, and the entire Solana network went down, and it took 20 hours for them to get it back up again. So this raised real concerns over, I guess, the security and the centralization of Solana. Imagine, like, the idea is that we're creating these layer ones that the financial world and all transactions will be built on in the future. And yeah, Solana's fairly young, but imagine if this happened for like MasterCard or Visa. Like, imagine if the payment rails of the world just went down for 20 hours. It's not cool. It's not cool at all. So that's why we need something that is decentralized and secure, and we'll come on to that shortly. Gavin Wood, creator of Polkadot, put it very well in his tweet here. Events of today in crypto just go to show that genuine decentralization and well-designed security make a far more valuable proposition than some big TPS, that's transactions per second, numbers coming from an exclusive and closed set of servers. If you can't run a full node yourself, then it's just another bank. So, if it's centralized power, then it's just another bank. If it's a lattice of decentralized nodes, then it's, by the people, for the people, no one having control over it. And, if you aren't familiar, this is all coming back to the scalability trilemma. A successful layer one blockchain needs to be really good at all three of these: security, decentralization, and scalability. Anything can be just scalable. That's what kind of Binance Smart Chain is. It's just internal, one company providing loads of transactions per second, or MasterCard or Visa again. I used to think Nano was a great solution because it was free to do transactions and it could just do so many, but it doesn't have decentralization and security. And I may come across as a bit of an Ethereum maxi, but I'm more of a decentralization maxi. And what Ethereum does is that it prioritizes decentralization and security. Think of them as like if you're building, I don't know, a palace, you have to make sure that the foundations are robust, and then afterwards you work on scalability, and that's the building and the finishings and such. And that's what Ethereum does very well. It's extremely secure, it's extremely decentralized. And scalability is it's the cherry on top. It's what is coming next. And that's what we're seeing with these numbers here. And that's what is promised to be delivered through 2.0 and sharding and such in the end of Q1 next year. So that, that's why, for me, it kind of, it's the safest bet in this space. And there will be lots of other different blockchains. For me, I think something like Solana, it's really nice to use, really refreshing to use. And if we're going to have a blockchain that is used for, in-game NFTs, if we want loads of microtransactions for swords and whatever it might be, or trading cards or something like that, then yes, you need it to be quick and cheap. Maybe it doesn't have to be as secure and decentralized because they're low value assets. But for the big stuff, for the DeFi and $1 billion assets that are NFTs represented on the blockchain, then Ethereum represents the best place for that. All right, come on, Tom, let's move on. So if I'll put a link for this. If you didn't listen this week, we had Cathie Wood, who's the owner of ARK Invest. She's all about investing in the future, finding companies that are disruptive, and she is very well respected, well regarded in this space. And it was a really good podcast. As I said, I'll put a link below. But basically, she's also agreeing that Ethereum is becoming sound money. It's becoming better than owning government bonds. That it is, this was a real coming of age moment for bankless to have many of the points that they have been purporting for a long time, kind of confirmed and ratified by Cathie Wood. She also said that the banks are scared, that she can see the market share of the banks being hollowed out. There was loads of good takeaways from this, but yeah, check it out. Really, again, further confirmation. Do you want more confirmation? All right, front page of The Economist this week is Adventures in DeFi Land. Again, link below. You can listen to this in a 30-minute podcast or read it if you don't have a subscription to The Economist. I've put the link below. Really good listen. It's nice to get a even opinion of crypto rather than, The Economist is extremely good at being very central in its opinion. It also, there were problems with the article as well, but just in general, they've taken a really good deep dive into DeFi, and I think their sentiment is more positive than negative. But anyway, have a listen for yourself. But this is the front page of The Economist. This is more and more mainstream, and we're also still early, so early. When you listen to this article, it really does make you excited for the future. Michael Saylor of MicroStrategies bought another 5,050 Bitcoin, increasing their total amount of Bitcoin by another 4% or so, or 3.5% was it? But yeah, massive purchase. What's that? $5 billion now that they have in total holdings. He's just a Bitcoin buying metronome. Thank you for your service, Mr. Saylor. A little bit of alpha, if you will. If you don't use Zapper.fi, then check it out and plug in your MetaMask. And it's a really lovely dashboard to be able to see. In fact, here you go. It's a really lovely dashboard that you can see. I'm not going to connect my wallet and show you my balance, but you can basically see all your assets and work out how much you're yield farming and lending and such and what you got. You can actually see the value of your NFTs as well, which is quite interesting for a lot of people. But anyway, they are doing these quests where you can, if you connect your wallet and click quests, I think it's next week from the 23rd. And if you do these things, you basically will get little NFTs. And if you get those little NFTs, I'm pretty confident you will qualify for one of their retroactive airdrops when they do have a token. So if you want some free money, do it, and you'll probably qualify and get those. So well worth doing, Zapper.fi. And I think, 23rd, next Wednesday, I think it is. What we got next? Oh yeah, so OpenSea fucked up. Well, one of their employees fucked up. He was basically buying NFTs on his obvious account with his own CryptoPunk before they then went on the front page of OpenSea. And then when they went on the front page, of course, demand shot up, and then he was selling them. So making a quick buck, like 10, 15 Ethereum or so, but dragging OpenSea through the mud. So they're not happy. He's been ousted for this. But again, it just shows that the transparency, even though it puts crypto it gives it a bit of a bad name, it's just one individual. What is nice is the transparency of this. We can see that this was what he was doing, whereas in other companies you may not have been able to work it out on the old traditional financial kind of rails and stuff. Yes, so Celsius networks have also been, you may have seen with BlockFi how certain states were going up against them and offering them a cease and desist. It's happened this week to Celsius in Texas and New Jersey. So we're just seeing more and more regulatory pushback. That's happening to Celsius. So I was mentioning that Terra Luna is getting its EIP 1559 moment. That's in 2 weeks now. And you can just see that if we divide the total value locked by the market cap, Terra Luna is still the cheapest when you compare it to these other layer 1 blockchains of Solana, Ethereum, Phantom and Avalanche. So it's still fairly cheap. It's 12th by market cap, but they're about to have their burn, and I don't think enough people are talking about this. So my pick of the week really is to be adding Terra Luna to your portfolio. This is not financial advice, man. I'm just a guy on the internet, but it's a really, really solid pick, a solid project, and I personally have 4 to 5% of my portfolio in Terra Luna and think it is something that you need to. All right, and lastly, we got the golden cross. This is when the 200-day moving average is crossed by the 50-day moving average. You may have remembered when we were getting that downturn, we got the death cross, which is a really bearish indicator. Well, we got the golden cross. Let's look at it on our charts. All right, let's just tidy that up so we can see it. Oh, this is Ethereum. We don't want that. Okay, so Bitcoin. Yeah, here you go. So this was the death cross, and now this is the golden cross. And these are lagging indicators. This is a moving average. So this is just noise, and this is actually what you should be paying attention to, really. And so it doesn't mean we're about to just get like some massive rocket, but I think it disconfirms, if that's the word, the death cross that we got, negates it, and basically means that we are in a upward movement still. The last time that we got this cross was here. So let's just have a look at what happened. Okay, so on the 22nd of May, we got the golden cross. And so we got that indicator. And nothing happened for 155 days. And then, boom, things moved. So it doesn't mean we're about to get a significant move in the market price, but it could mean that we get a period of consolidation. And that's what I've got my little square on here. And then we get that rocket move, and we may get a 500% move up. Just don't know. But it's nice to see the golden cross. It just means that, you know, we're in a bullish position technically on the charts. So I've just put this on. Let's get rid of those moving averages because it just makes it a little messy. Okay, so, you know, we could just bounce around back and forth. And we could also find that this becomes quite resistant here. And I wouldn't rule out, I think there's a good chance that we do, the momentum feels quite strong, and we could continue to move up here. But there is every chance that we see, you know, we could see something like this. We could see us hit our head here. We could come back down, and we could find support again at 30,000. And then we could get this kind of consolidation pattern. And then we get the breakup. But yeah, I'm just forewarning you that this could start to become a little bit of a barrier for us. So I'm not surmising that that's going to happen. I'm just saying that that's something that we should prepare ourselves for. If we did bounce all the way back down here, it doesn't mean Bitcoin's dead. It just means we have to be a bit more patient and wait a little more. I expect most likely as we consolidate and pop, but we will see. Okay, before I even go into those, I'm just going to go a bit macro on you and look at the S&P 500. And I don't ever do this with you, but I think it's important to... So yeah, I'm a finance guy, and my original investing is in stocks. And if you look at the S&P 500, come on chart, you can see that we've been in this massive upward move now for like 250 days. And we've constantly been finding support at the 50-day moving average and at this trend line. And it's just broken it. And we have broken it before and come back up, like here and here. So it doesn't mean that it's a definitive break. And, you know, the Fed are meeting on Tuesday, and they may, they may say, no, we're still going to continue the $120 billion of money that we're pumping into the system forever. But, you know, you've got to, when you're investing in crypto, you've also got to understand the macro picture as well. And it could be that if this we haven't had a 5% pullback in the stock market for like 200 days. It's the longest run in 25 years. And if we do break this, we could, you know, this could lead to, what would 5% from here be? Yeah, 5% from where we're at now would take us down here. And I would expect a little bit of contagion. That would put the dollar up, and the dollar is moving up. And it would obviously... So this is the dollar, the DXY, so dollar versus all the top 5 other major currencies. And all of these things would be headwinds for crypto. So it's just something to be aware of, that the stock market's just looking a little bit vulnerable right now. But as I said, it could be a fake out. We could just bounce back up because the monetary policy is so easy. 120 billion a month just continues to be pumped into the system. And we can look at that if you want. No, I want to go back to crypto, Tom. But yeah, this is monetary supply. This is the amount of dollars being pumped in. It's mental. 30% of all the US dollars in history printed in the last 18 months. All right, anyway, back to crypto. So Ethereum is coming into support right now. It continues to kind of hold this nice upward channel and at support right now. I would anticipate this is actually a very nice buying position. I would say we've got this horizontal support. If we put a trend line here, got horizontal resistance turned support, and we have this diagonal support as well. So I would anticipate that we're going to continue to get a nice bounce here and probably move up from here personally. Looking at Ethereum versus Bitcoin, so Ethereum has been losing ground in the last 3 days. So we got this wedge, we tightened, we broke out, and it looked like we might start and challenge 50% market cap again, only for that to turn around and for Ethereum to lose some ground versus Bitcoin here. So we will see. We'll see where that goes, but it's no real clear direction, really. If anything, Ethereum looking weak, looking a bit weaker than Bitcoin when comparing the ratio there. Looking at Bitcoin's dominance, so we got that breakout, came down, and it has now started to find support and move back up again. Again, not sure if that is a sustained pattern. And if we look on this very long term, you can see that we are down at these historic lows for Bitcoin dominance. And as I said, it's because we have a much more mature ecosystem than we've ever had before. And so Bitcoin's dominance will go down further, in my opinion. Looking at Ethereum's dominance, again, losing ground for the second week in a row, where it has found support on this upward channel. We'll see if it can hold there. But overall, I mean, this actually, my charting could be completely wrong here. We could just look at this as one big bull flag, and likely we will, as and when we break the 20%, we'll get a significant move to 25% or so, which I do expect to happen at some point. DeFi, a bit of a doji for the week. DeFi actually slightly down. It was having a cracking week, looking really nice, and I still think DeFi is the best value area right now. I think that this is a great time to be dollar cost averaging into different DeFi coins or just buying the DPI index, because I think we're going to see Arbitrum successfully reducing gas fees, that layer 2 stuff I was just talking about. And I think that's going to make DeFi on Ethereum really appealing once more. So that's how I kind of see that playing out. So I've been adding to my DeFi positions, adding to my Luna positions. And if you value DeFi in Ethereum, you can see that it's just so painfully low, but I guess it means it's good value retrospectively. So even though I like to buy momentum, I think now's a good time to be dollar cost averaging into DeFi. Looking at Metaverse, this is Metaverse valued in Ethereum. This is the MVI index on Index Co-op, so the top 20 Metaverse tokens. We kind of lost our channel and it's just starting to come back up again, but it's, I guess, a bit rudderless. We'll see. I still, again, I think everyone should have a good 5% of their portfolio in MVI or other Metaverse tokens, personally. And Solana, so obviously we had, considering it went down for 20 hours, I think it's fared very well. I think what happens really, as I said before, is a consolidation. I think we just move sideways. It has to clean up its act a bit. It has to really continue. For me, it's not really a great time to just be buying into Solana right now. I would rather buy as and when we break 200 and move upwards, or on any dips down here, catching any of these candles. But I think it's maybe a bit expensive now if you consider the breach effectively that they have had. I would want to see more and more activity on Solana. I want to see more and more cool projects and games being launched on it. Before, I've got a good bag of Solana, don't get me wrong. I just don't know how appealing it is right now at this price. And Solana's dominance is at 2.2% of the total market cap. Finally, finishing with the total market cap of crypto, and you can see that we are basically just nicely channeling along, and we sit at $2.1 trillion in crypto. All right, that's it for now. I hope you found it useful, and please do hit the like and subscribe button. Thanks for being here at the end, loyal Crypto Cat. I will be putting out more content during the week, and please do comment on what you would like me to discuss. And that's it. That's it for now. Happy investing, everyone, and I will speak to you soon. I'm just a guy on the internet. This is not financial advice. Bye-bye.